Good morning, everyone, and welcome to the weekend update. We're going to start, as we always do, with the Dow 1 hour chart. Quite a choppy week with a downward bias, down one day, up another day. Kind of surprising this is all we dropped, considering all the really negative news that is out there. We're not going to get a stimulus. This election, not surprisingly, is going to be even more nastier than we ever thought, and that is all negative for the market. We did see, or have been seeing, big down days, and then followed by slow moves higher. On Friday, last couple of hours of the day, they were able to squeeze out a 358-point move. We're right up here at the 50-day moving average and the downtrend line on the 1 hour chart. If we flip over and look at the daily chart, again, I left this downtrend that broke last week in place, and you can see where this continues and where we have the downtrend from the highs. Really, it's the 20-day exponential is the number we need to watch this week. That's at 27,600, give or take a few points. We break above that, and we could see a 500 to 1,000 point move. Nothing is out of the realm of possibilities when it comes to this market, especially with the trading programs out there. One thing I will say, the movement up, as you can see, continues to be on lower volume than the movement down. Now, over the last couple of weeks, we've seen some of the biggest, by biggest I mean record money outflow out of the market ever. So we've got stocks getting run out the door. They're selling these stocks, but it's not really being reflected in the indices, and this tends to happen before big downward moves. The month of October, especially in election years, can be a nasty month, and that is why, as of last week, I personally, and I'm not getting into politics right now, did not like all the news flow that we heard midweek regarding the election being contested, and for that reason, it is time to go into that election cash stance. So I am at 95% right now in the swing account and going to try and keep above the 90% level over the next month into the election. What that means, as I said in the chat room, is the emphasis is going to be more on day trades and near-term trades. Now, that doesn't mean it's going to be a strictly day trade market. We did extremely well on the hot sector of the day that stretches over 1 or 2 days. That's going to be the focus, at least my focus, in the near term. We had some fantastic action, and we'll go over here in a little bit, doing that strategy this week. Tech stocks continued to take it on the chin, but you can see right here, they've actually been holding up rather well, which is a surprise, and we could see a breakout on the tech stocks, Apple, Tesla, all the usual characters here in the next week. They are oversold. If this was a normal stock chart, we would definitely be looking for an upward move on these plays this week. But anyway, let's jump into some stock plays. Now, we've been sitting on our hands really over the last 6 weeks, and this past week was one of the best trading weeks we have seen in about 6 or 7 weeks. And what drove it was, it started all off with SPI. This thing went crazy all the way up to 46 cents on a press release that who knows why. The algos came back. The press release was perfectly timed with the sell-off that we were seeing in the large caps and the tech stocks. Those robotic trading programs were looking for a stock to move, and this is the one they picked, and that ended up flowing into some of our other plays. Sun. Look at the move we got on Sun. Holy moly. From 70 cents to 8 plus. And that just started an avalanche of movers here. PECK. We were only looking for a move to 550 on this stock. It went to $14 plus. Woo! With that in mind, and after we banked on those, we jumped into CBAT. CBAT. We were in the 80s. We added some more, and on Friday, this thing went crazy. Ended up hitting 370 in pre-market. Multiple percentage moves here. AIHS, we jumped into this one at 50 to 55 cents on Thursday, and the initial target on this one was just a move up to $1. That easily hit. Then on Friday, when we saw CBAT going crazy, this stock actually gave us a pre-market entry in the 70s and traded back over $1. I mean, this kind of action is phenomenal. Now, when I was talking about us focusing on day trades, after Sun had ran, we picked CBAT and AIHS for continuation plays the next day. Now, CBAT ended up closing, we called it an overnight play in the 120s. You were able to get 200% on that one. AIHS, same thing. We were looking for a buck and ended up giving a 50% move. Now, we booked gains on all of these plays except AIHS. I took some AIHS home. Let's see if we get a move on this one like we saw on all the other ones. It was usually 2 days later after the big volume that we saw the move. Now, if we go back to SPI, SPI is actually flagged. If these guys don't drop an offering, this action looked like there's an offering coming, but if they don't drop an offering Monday morning, I could see them chasing this stock to 1250, 15 plus, and that should help our AIHS on Monday. BRQS, this is another one in that sector. As you can see, the stock loves to spike up. We got a big spike on Friday, came right back down. Let's see what happens with this one on Monday. Now, as I mentioned, 95% right now in the swing account. So that meant I jettisoned a bunch of stocks midweek last week. Now, when you're wondering what you should do or how you should unload stocks, when we're in a market like this, the way I look at what stocks I should keep is I look at my positions and I go, okay, if I sell all of my stocks, which stocks, if they run, are really going to annoy the crap out of me? Which ones will I be beating my hand on the desk going, I should have held that stock? Those are the stocks that I hold when I go cash. Of course, ADMP is one of them. I would be sick if I was out of this stock when that news came, the news that we've been expecting to come. Now, we've got a nice bottom on this chart here right now. Again, we're pivoting back to COVID. COVID actually might do very well this week. Cases are starting to explode everywhere. Despite what you hear, remember, this is an election year, so a lot of this news is tainted on both sides. But Europe, cases are spiking. New York had the record number of cases this weekend, 1,000 cases of COVID. That beat their June record in one day. So this thing is far from over. We're about to hit the flu season. These plays are not over yet. Now, as for the market, what may cause, I'm jumping around here because it just jumped into my head here. What may help the market come Monday was weekend news that Johnson & Johnson's drug that's in trial, 85% of people who took it ended up getting some sort of response from it. So that could potentially be the reason to pop the market on Monday, but that should also help some of these other plays. Now, there's also some news out this weekend that only 1 in 10 Americans actually have signs that they had or have had COVID, which means this herd immunity that everyone's talking about, we're far from being anywhere near that right now. So again, the COVIDs are not going away anytime soon. Now, for a lot of you guys who've not traded pandemics before, the roadmap we're seeing on these stocks is almost identical to the one that we saw when SARS and the bird flu and the pig flu and all these other flus ended up popping up 15 plus years ago. There was a huge mania, they quietened down, then another huge mania, quieted down, another huge mania. We've only had the first mania on these stocks. As for ADMP, 80 cents would be the break, but really when you'll start to see guys starting to believe in this stock will be a break over 85. And then if it breaks the 50-day moving average at 91 cents, you're going to have everyone looking at the June highs at 150. So still early days here, but we've got higher lows in place on this one. The bottom looks to be in. OGEN is another one that I would be annoyed if this one ran and I did not have a position. Downtrend break, 70 cents. 80 cents, you're going to start to see some people sneak in, and this is where the algos will come in when it breaks the 50-day moving average at 90 cents. The other COVID type play is VTGN. Again, this one just blows my mind. Every single day we see articles about mental health in the U.S. because of job losses, what we're seeing out there with COVID, just the election fears and everything. These guys are in the perfect market right now. The chart is getting closer and closer. Remember, we still have news regarding their trial for their mental health drug in New York could drop at any time, and this will be one of those stocks that will have no problem chasing that headline news, over $1 one of these mornings. INUV, yes, it continues to bleed, but hopefully this drop that we saw on Thursday when everything was just getting thrown away as the focus went to EVs, we did get a nice bounce back on Friday. This stock needs to get over 40. Right now, we're in no man's land here. I have my position. I'm sitting on this position because this is a stock I do not want to be out of. Last one, ARPO. Now, ARPO, as I've said before, I've alluded to this one. I view this one as a baby NAVEX. The number of large pharmas and partnerships that these guys are involved with their COVID trials, this stock should not be trading at this price. When you look at the valuations of stocks like VXRT and iBio and AIM, this is a woefully undervalued play, especially given the massive cash balance it has. Now, this action that we see here on a stock, as I mentioned last week, this is the kind of action where someone knows someone, or someone knows someone, someone knows something. There's data expected. I'm thinking we're going to get some very, very good news soon on this one. And when we do, this is one of these stocks that could easily run large depending on how good that news is. And again, this is the kind of biotech with the kind of pipeline that Big Pharma will come in and gobble up. Quick mention on some large cap stocks before we go here. Snow, the Snowflake IPO. Now, this stock priced a couple of weeks ago at was going to price at $75. They raised it to 90. Then they raised it to 120. Then, as you know, it opened at 200 plus and ran to 300 plus. But even though we've had this big sell-off in the tech stocks, Snow has held up fantastically. It's held that $200 level very, very well. Now, what I'm looking at for this week, 237 break. 237 break on this one. We're looking at 254. 270 plus. For those of you looking to trade some of these large cap stocks, the strength on this stock and the sideways action, this is the 1 hour chart we're looking at. This looks like it should be a go, especially with the tech stocks setting up this week. And then last but not least, Tesla. On Thursday, this stock looked like it was going to 300. It broke down through the 50-day moving average, but it rocketed very impressively back up. This is a rock-solid support level now on Tesla. What are we looking at potential upside near term? 462. Buy area, 360, 370, or 462 break with an eye on 500 or a bounce up to 400. Just for a couple of large cap stocks out there. I know a lot of you guys are starting to jump into these, but I think the action we saw last week was very, very similar to back in March and April, where we had the big market sell-off, and then we had the robotic trading programs come in, pick a sector, and just move from one stock to another with massive, massive volume. That's been lacking over the last 6 weeks. We saw it last week. What will this week's crazy robotic trading sector be? Well, we're going to look and see. I've got a couple of ideas of what it might be, but I'm going to keep them myself until we see that action come Monday, Tuesday. So that's it for the video, guys. Please like and share the video. And if you've not subscribed to the channel, please click the subscribe button, and I will see you all in the chat room tomorrow. Bye.